G'day there. Now, welcome to the first closing bell of 2023. I hope you've had a good break. I certainly have. Just not thinking about the markets for a while is brilliant, especially the sort of market we've had for the past year. It's been a real slog, hasn't it? Very difficult to make much money out there at all. And maybe that is going to continue on for a while. But we've kicked off pretty nicely this year with the China reopening story really taking hold. We're seeing copper flying to the upside. We're seeing gold really taking off. Rates are coming down with inflation, less of a stress for the market as it slowly comes off the boil. The Fed's still trying to jawbone rates higher, or at least make people think that they're not going to turn and capitulate and start dropping rates rapidly. They really don't want inflation to take hold again. So it's this cat and mouse game going on at the moment. The markets want to rally. The Fed doesn't really want it to rally yet. Inflation coming off the boil, China reopening story getting people bullish. So things are really changing quite rapidly. And I guess the question is it time to jump on board? So let's jump to the charts and just have a look at a few things. And look, sometimes I just am at the point of thinking it's 50-50 either way. And often the markets will be stuck in the middle of a range. And I'm no wiser than you on which way it's going to break, especially with so many big forces at play at the moment, with that China reopen versus the slowing growth around the world. So it can be pretty tough having to make some statement about where I think markets are going. But I'll give it a shot just to give you a sense of what I'm looking at the moment and what I need to see. So this is a weekly chart of the ASX 200. I think why not start the year there? You may remember from last year, look, I was looking at this as being pretty negative. The way it was moving, what I was looking at last year was really the wave down that we saw in the middle of the year from an all-time high. And I was just analysing that major wave down. And we were looking at the point of control, which was super important. And, you can see there, we had that rally to the point of control down into the buy zone. If you haven't watched my videos, you should go back and check out a few to get a sense of what I look for. The major things that I'm looking for within key ranges is these buy and sell zones, which is a 12.5% to 25% and a 75% to 82.5% range, 87.5%, sorry. And those areas are where I expect to see higher probability that you see a change of direction and prices moving back to the point of control. So you can see there, as we headed into the end of last year, we did see a rejection from that zone, and it was heading back to the point of control. And it was a pretty, dangerous spot, because we had that really big sell-off. And often once you've got a really big sell-off, you'll get a retracement up into that sell zone. And if it does sell off from there, crack back through that point of control, it can be the beginning of the next leg down. And that's what I was sort of wary of and talking about with you, and was saying, look, if it gets under that 7,000 region, which is sort of around where that midpoint is, the point of control, it's looking pretty dangerous. Now, in the end, the market managed to hold that level and turn back up. And this is, I think, would have caught quite a few people out. The fact that the market did manage to hold in there. And you can see we got the weekly trend is up. I've got that 10-week exponential above the 20-week simple. That's just my little simple idea of those weekly trends, which can be really useful. And what I need to see often with these weekly trends, I want to see a retest and then for it to take off again before getting more confidence in that weekly trend. And so we have actually seen that. So, from just looking at it from that weekly trend point of view, and the fact that it is busting out above the high, it's starting to take shape of creating a bit of an uptrend here if it does bust out. And remember, we've got an all-time high just there. So it's been major resistance for a while. Look, very surprising that our markets managed to do this. But look, you've just got to accept and let the charts tell you what it wants to do. And, if it does bust out above the all-time high, which is not far away, all of a sudden it is going to be looking all right. And if we look at the monthly chart, you can see on this monthly that it is still in the long-term downtrend, but it's getting closer, isn't it? So if we do see the breakout and off to new all-time highs, and that long-term trend turns back up, I'm not going to have many excuses for being bearish, even though I may be bearish on growth. So this is where that China reopening story, is it enough, maybe for our market at least, to get that whole commodity complex really moving, and to get the Aussie dollar possibly moving, and our stock market may ride on the coattails of China, and even if the US remains weak. So interesting development. I certainly didn't expect it to be able to be this strong. And look, if it stays below the all-time high, and all of a sudden the music stops and it heads back below that 10-month moving average, all of a sudden, the music can stop and it can look very different very quickly. So it is at that point of really difficult to make a very strong statement one way or the other. But you are saying, look, this is quite impressive, the way it's holding in there, and certainly to new all-time highs and a long-term trend shift up. You haven't got much excuse to remain bearish. But if we turn to the S&P 500, it's a very different story, isn't it? It's not often you see, a really different chart with our market versus the US, and often we're weaker than the US. So, this outperformance of our market versus the US may be an ongoing theme. And you can see quite clearly, still in long-term downtrend and still below the 10-month moving average. So, that's quite an interesting point. You can see that long-term trend has remained up for many years. The last time it's turned down there was the 2008 crash. And I think there was a tiny little false signal here for a few months before the trend turned back up. So it's been a pretty good indicator for quite a long time. I could show you past data beyond that, but no need to waste your time. So from that point of view, US is still not saying, it's time to buy, unless you're, quite aggressive and looking at the fact that we have had a monthly buy pivot a few months ago in the US. So, that is one sign, the potential that it's trying to turn around. And look, if it busts up through those highs, especially that's up around, 42, 4,300, it will look different. So, busting up through there, US market could be ready to run. But while it remains in this state here, it really is, 50-50, I think, one way or the other, which way this thing breaks. So you are taking the strength in our market with a grain of salt until you sort of do get much of a confirmation, I guess, that the US is also going to hold in there. If we do have a look at what is looking good, though, gold is certainly performing very well. And hopefully you've been watching these for a while, and you'll remember my analysis of this a while back. We had the big rally from 2019 to 2020. We had the correction down there, which is where I've created the range from. And then we had the midpoint of that range around 1876. And you should remember I was talking about, I was worried that it could actually break and have a big fall. But once we saw markets turn around and we created the monthly buy pivot there, I was saying, wow, this could take off. And I gave it targets to that point of control. So we've hit that target now. I've picked up a few gold stocks along the way, which are now up about, one of them up 50% in a matter of months. And I was explaining it to you in the past, saying, look, there's lots of positions have been put on here during this period of the correction. And when prices break below the low of the correction, there's lots of stop losses go off. And you've got to wait to see how far down it will go, because it could have gone down further. But the buying pressure came in once those stoppies are done. And once it turns back up, you're looking at that as an opportunity when you know that you've got this big, strong upward trend in place. You're looking at the false breaks of the low of ranges as the area where it could be the beginning of the next leg up. And I was saying that to you a few months ago. Just want to, follow up so that you can see how things have panned out. And the fact that what I was saying to you back then and how it would play out is pretty much taking shape quite nicely. And the fact that it is breaking through the point of control is quite bullish, that it's managed to just slice straight through it. Because now you're considering this sort of long-term picture and saying, well, this is looking really strong. The trend is up. We've had the false break of the low and it's heading up through the point of control. So you're saying this is the potential that it could be the beginning of a next wave to the upside. So that's why buying those false breaks of the low of major corrections within a really strong uptrend is often the best point to get on, because if things turn back down and break below that low, you get out very quickly, because then it's looking really dangerous. So you don't have to risk too much to find out if you're right. And you've got the point of control as a target. That's where you're looking to take part profit. And then you've got a free look to see what happens. And if it does bust out above the all-time highs there, you're looking at the next wave up in this very long-term uptrend. So gold, certainly looking interesting. There's not much else out there really that jumps out apart from, copper starting to look good, nickel. So, looking at the commodity complex, that is the long-term major bullish theme. Is the China reopening story enough to really kick it into high gear, even if there's recession? That remains to be seen, I guess. But yes, picking up a few beaten up gold stocks that are highly leveraged to the gold price probably isn't a bad idea. So that's really all I can see that's jumping out at me at the moment is that, look, I'm not quite there yet as far as turning bullish on stocks. I probably do need to see our market break out to new all-time highs and to see a bit more of a constructive move in US markets that we can carry on. And yeah, if things turn back down, I'm certainly ready to get bearish again quite quickly if that long-term trend remains down. So it's a bit sketchy right here. It's a bit tough, but gold certainly has taken off and has done exactly what I was saying for the last few months. So hopefully some of the stocks that I was throwing out to you, I think I did point out Evolution, Ramelius. And so, maybe a few of you did jump on those at the time and you're happy about that. But yes, it's certainly still tough out there, will be for the first 6 months of the year, but hopefully I can help you out week to week. So do tune in every week with these closing bell videos. All right, well, that's enough for this week. I'll come back with more next week for you.